AMD has been on a tear this year. They are up almost 27%, and they have been one of the best performing stocks this year. They just reported earnings last week, and they showed a lot of strength. Even on a sector that is in a earnings recession, they showed a lot of strength and some good insights on the data center market, and even on the computer side, they showed a lot of strength, gaining market share on Intel. So let's talk about things we like on AMD. So they are growing a lot in the last years. In the last 5 years, their revenue are growing at 20% a year. Their gross margins are good. They have gross margins around 45%, which is not bad at all. They are a company with low debt. They have 5.9 billion on cash. Their return on invested capital, which is a really important metric, they have the last year return on invested capital have been on 40%, which is really high, and we love that. So on our checklist, they have a moat, a good competitive advantage. They are gaining market share on the Intel. They are growing a lot on the data center, and on the graphics cards. If there is a company capable to fight Nvidia, it's AMD. I think they can gain some market share as well there. Their revenue growth has been really good in the last years. They have been growing at around 30% per year. They have a high return on invested capital as well. Their debt is really low. They have been free cash flow positive now, but they don't return capital to the shareholders. They don't do dividends. They don't do buybacks. Actually, they are diluting the shareholders, which is bad, and it's something we don't want to have in a company we own. So, and valuations. Let's see if they are a good deal or not. So let's do our discounted cash flow for the next 10 years. In my base case, I think for the next 5 years they can grow around 16%. Let's bear in mind that they are growing at 45%, 60%, 42%. I'm expecting for the 2023 year their revenue stay flat, and for the next year they can grow around 16%. So if they grow 16% for the next year and for the next 5 years, and for terminal rate for the last 5 years they will grow at 10%. For our final PE, I will assume 18. I know it's high, but I like the company. I think they have good metrics. They have low debt. They have good margins. They have high return on invested capital. So I think they deserve a premium. For their net income margins, I think it will be around 25%. So I will be conservative. I will assume 23%. I think it's a conservative analysis. So, and for our best case scenario, I think they can grow around 20% for the next 5 years, 12% for the last 5 years. If they can grow around that, I think they deserve a 20 PE, and I think in an optimist case they can have 26% net income margins. And for our worst case scenario, I will assume 12% revenue for the next 5 years, an 8% revenue growth for the last 5 years. I will assume a P of 16 for this case, and 20% margin. So if you assume this for our 3 scenarios, I believe my intrinsic value for AMD will be around $60. I think I'm being some conservative. It's not the intrinsic value. I have some margin of safety. For example, I'm using a discount rate of 15% for my bull case, and for my base case 12.5%. So we have some margin of safety there, but I think my price for AMD will be around $60. I think it's a good price. I will try to buy. I have some AMD shares I bought in the dip last year. I think I still own them. I will hold that. I believe now AMD is still overvalued, but if we have another dip in the market, if the price of AMD goes down, I'll try to add some more, maybe around under $70, maybe around $60. I don't know. Maybe we will not have that chance, so I will still hold it. So it's my opinion about AMD. It's my price. It's what I think it's the value of the company. So I hope you like the video, and I hope you find it useful for your research. So I hope you see you in the next video, and don't forget to subscribe.